Hello everyone, this is Roland from My Goodie Store, and today we are going to talk about taxes. And this article that I found, or I found it I think the next day. I was supposed to make a video about it, but I had a lot of stuff going on, so I didn't have a chance to do that. But today I have time. So this is about the IRS crackdown. The Biden administration says it can raise 700 billion by targeting tax cheats. So people that are not paying their taxes. So here's the article. If you want to read it, you could get it from CNBC. Why is this thing popping? Okay, you can get it from CNBC. All right, yeah, whatever. We can see it. So we're not going to read the whole article, but we're going to take the key points as they put the key points in for us. So the tax gap is estimated to be about 7 trillion over the next decade, according to a Treasury Department report issued Thursday. So that was Thursday of this time. And it says, so the tax gap is $7 trillion. And around 80% of the gap, 80% of the gap is from underreported income, largely from opaque income sources like proprietorships and partnerships among the wealthy, the Treasury said. So, in this article, they want to let you know that they're going to go after the wealthy that are not paying taxes, but they've been saying that. But anyway, the Biden administration is making it their sole purpose to go after people that are not paying taxes. But yes, they're going to go after the wealthy, but the wealthy have so money. Like they got money for lawyers, they got money to pay CPAs, they got money to sweeten up your hands and sweeten up your pockets and sweeten up your purses. So they're not gonna get a lot of wealthy people. Maybe they'll get a few just to make an example, but the majority of people they're gonna get is people sole proprietors, self-employed, gig workers such as independent contractors and stuff like that, people who have to pay their own taxes. That's where they're going to come up, and it's specifically for the people that took the PPP. Because with the PPP, with the SBA programs like such as the EIDL, which what is different from the EIDL from the PPP, the EIDL they had to verify that you did pay your taxes. So they pulled your tax return transcripts from the IRS, your 2019 tax return transcript from the IRS. If you didn't have that, you wouldn't get approved for the grants, the targeted advances and supplemented advances that they were giving out. You couldn't get it, neither the loan. So, but with the PPP, and then also with the PPP, they had this loophole that they said that if you could give them an unfiled or filed version of the tax of the Schedule C or whatever it may be. And because of that, a lot of people used that loophole and then ran and got the PPP, but then didn't run to pay taxes. And they started giving PPP money from last year. I know people from last year that got thousands of dollars and still didn't do right by the money. They don't have no method of accounting at all. Not even a QuickBooks, not even a PayPal. Just some people just doing Cash App, Zelle, which doesn't even help because you can't get a balance sheet from there. You can't get a profit and loss sheet. Nothing. And then you didn't pay taxes. 2021 came in, and plus they even extended the time to pay taxes. People still didn't do it. At least fill a 1040 with a Schedule C. Some people still didn't do it. But you're trying to take the PPP money. The first people they're gonna come after is the people with the PPP money. That's what they're gonna, because they're gonna get all this money that they were pumping in the economy with the different stimulus checks. They didn't have this money to begin with, so they're gonna get their money back some way somehow. And then when you don't pay your taxes, you're only hurting your own self, because in the future when it's time for you to retire, you're not going to be able to get Medicare or Social Security because you never paid taxes. You never paid payroll tax. You never paid anything towards your retirement, unless you have a retirement fund, which a lot of people don't even think about. But even if you do have a retirement fund, paying your taxes, that's a plus on that. Because I know a lady, she worked for years, all of her life. She never worked for anybody. Now she's an older woman, and she's one of my sister's clients, her elderly clients. She gets like a $1,500 Social Security tax because with Social Security, when you pay your taxes, you if you're self-employed, you have to pay the whole 12%. When you are an employee, you have to pay 6%, and the employer pays 6%. But when you're self-employed, you have to pay the whole 12%. So in that case, pay your taxes. See, the second quarter is about to end, the end of June, and in July, payroll taxes will be due. It's the best time to be paying your taxes send the money in advance. Because if you don't send your money in advance, when you pay your taxes, they're gonna take it out of your refund, which is good. But if you can pay it in advance, it's better. So they don't have to take that money out. So pay your taxes, get in the system, sign up for the EFTPS, sign up for the Social Security Administration, sign up for your state and local tax websites so that you can pay what you need to pay. Give Caesar what is for Caesar and give to God what is to God. But we're not talking about God, we're talking about Caesar. So give Uncle Sam what he deserves. Because when the PPP came out, they opened it up to help a lot of people, especially with the PPP. So the best thing that you can do is pay your taxes, so you don't have to be in trouble. Because when they do get you, which they eventually will, they're gonna slap you with a failure to pay and failure to file, and all those comes with penalties and interest. And sometimes some people lose their whole businesses. And then with the government, they can garnish your wages, they could take your taxes, they could go in your bank account and stuff like that. You don't want to be dealing with it. Because I remember when I did work with the census, I did the census with the government recently, the census, and then they had gave us an iPhone. And like the guy who was our supervisor, he was like, make sure you don't lose this, because the government is petty. Say this phone probably cost them $200, but they will charge you $2,000 if you lose it. So if you cross them, they will definitely make you feel that. And another thing that we encounter too, people who are filing taxes, like what they say, underreported income. So they have to report their own income. So they don't have, this is where the method of accounting comes in that you need. They don't know exactly what comes in and exactly what goes out. So when it's time for them to do taxes, they just tell the tax person, okay, I made $100,000, I made $60,000. I know this guy, he told the people that he made $60,000. In reality, he made way more than that. And it's when stuff was going on, that's when he tried to change what he was doing. But anyway, but when you do stuff like that, you say you make $60,000, but you have expenses that is in the hundreds of thousands. What you gonna be at? A loss. You're gonna be at a loss. And then these people have been in business for years and been reporting losses for years. In reality, you only supposed to report a loss for 3 years. If you keep on reporting loss, you open up yourself to being audited, because the IRS gonna know why you keep on having a loss. You shouldn't be in business. So people, please pay your taxes, because not only he's gonna go after tax cheats, but they even hired more tax investigators, auditors, or whatever, people that work for the IRS to go after people that are not paying taxes. So if you have an ear to hear, please hear and pay your taxes. So thank you for watching, and I'll see you in another video. Bye.